We've all seen this happen. A company drops a fantastic quarterly report. The news is all good, and you're thinking, okay, this stock is about to take off. But then, crickets. Or even worse, it goes down. Well, today, we're diving into a perfect example of this market puzzle with the biotech company Kamada. So check this out. On August 13th, 2025, Kamada's report was just a head-scratcher. Their earnings per share didn't just beat expectations, they absolutely crushed them by 44%. Revenue was up, they were so confident they even raised their profit forecast for the entire year. And the result of all that great news? The stock actually closed down. Yeah, down 1.3%.
I mean, that's the big question, right? With the report card that good, a drop in the stock price just feels like it makes 0 sense. So in this explainer, we're going to get to the bottom of it. We're going to unpack exactly what was going on here.
Okay, to solve this little mystery, we first have to really appreciate just how good the news was. So let's start by decoding this flurry of good news from Kamada's really strong quarter.
So the headline number, the one everyone looks at first, 13 cents of GAAP earnings per share. Now, Wall Street was only expecting 9 cents, so this was a massive 44% beat. I mean, that's a crystal clear signal that the company was way more profitable than anybody thought.
And this is where you see the company's confidence. They raised their guidance for what's called adjusted EBITDA, which is really just a key measure of their core profitability. So they didn't just have a good quarter, they basically broadcast to the entire market, hey, we think the rest of the year is going to be even better than we told you before.
And the message from the very top couldn't have been clearer. The CEO, Amir London, laid it out right there. The takeaway for any investor was supposed to be super simple. Kamada is healthy, it's growing, and it's making money.
So the quarter was rock solid. But was it just a one-hit wonder? A fluke? Not if you look at their game plan. Let's dig into their 4-pillar strategy to see how they're building for the long haul. See, Kamada has this really clear 4-part strategy. They're growing the products they already have, they're on the lookout for smart acquisitions, they're expanding their ability to collect plasma, which is a key raw material for them, and, this is the big one, they're pushing forward a new therapy that could be a total game changer. This isn't a company just hoping for the best. They have a real blueprint for growth.
And this strategy is already paying off, like right now. Just 2 days before this earnings report, the FDA gave the green light to their new plasma center in Houston. This isn't some far-off promise. It's a real asset that's expected to bring in up to $10 million in revenue every single year. Now, a solid business, that's one thing. But what gets investors' hearts really racing is that home run potential. For Kamada, that's their InnovAATe pipeline. It's a high-stakes bet on the future. So before 2025 is over, this whole program faces a huge test called a futility analysis. Now, the name sounds kind of negative, I know, but it's actually an early checkup to see if the drug is on the right track. Passing this test is what you'd call a massive de-risking event. Basically, it dramatically boosts the odds that this drug will actually make it to market one day.
And why is that one test so important? Well, just look at the size of the prize here. The market for this therapy is projected to be $2 billion. Success here wouldn't just be a win for Kamada, it would totally transform the entire company.
All right, let's put all the pieces together. We've got a massive earnings beat, higher guidance for the future, a solid long-term plan that's already working, and a multi-billion-dollar shot on goal in the pipeline, which brings us right back to our central mystery. What on earth was going on with the stock that day? This timeline really tells the story of the day. So, before the market even opens, the stock is already pointing up about 3% just based on the fantastic news. The opening bell rings and it pops even higher, up 3.6%. But then, you see this slow fade all day long until it eventually closes in the red.
So what caused that fade? Well, the most likely culprit is a classic market behavior called profit-taking. You see, investors who were already holding the stock saw that 3.6% jump in the morning and thought, hey, perfect time to sell and lock in my profit. But as always in the market, it's a story with a little nuance. Profit-taking was definitely the main driver, but a couple other things were going on. While revenue was up, it did miss the Wall Street consensus by a tiny, razor-thin 0.7%.
Not a big deal to a human, but some trading algorithms might sell on that alone. Plus, trading volume was way higher than usual, which just magnified all that selling pressure.
And that really brings us to the crucial point of all this. That weird, paradoxical stock movement wasn't the market saying Kamada's quarter was bad. It was just short-term market mechanics at play. A small dip, especially on a day with great news, doesn't always signal a real problem. Sometimes it really is just the market being the market.
And this all leaves us with a much bigger question, doesn't it? It's a great reminder that, in the short term, the day-to-day noise of trading can sometimes drown out the fantastic news of what a company is actually doing. So what does it really tell us when a company's solid fundamentals are met with, well, a shrug from the market?